Hello everybody, welcome back. I'm going to make this one short and sweet. There's no need to go into great detail about this, but I appreciate there's a lot of people that are probably a bit worried about what's going on right now, not really sure about how to take this market. And I'll put it out there, nobody really does, okay? Nobody really knows. But what we can do is we can have a look at what's happened in the past and try and make heads or tails of it. And on this channel I've been telling people, yes, there's a very strong chance of an alt season, of which there still is, but I don't look at things in terms of price, I look at things in terms of level of risk. It's what I was saying on my live stream the other day, and I say it to my Patreon members a lot. Join the Patreon, by the way. You get some decent feedback from me about what you're doing wrong and what you're doing right. But anyway, that aside, I've been saying I'm not looking for a 45k, a 55k. I'm looking to measure the tops in and investments in levels of risk. Alright, so on the weekly, and this is my preferred time period really, is dailies and weeklies. I don't go in for all that little business unless I'm doing some scalping, which is what I'll be doing as soon as I finish this video. But this is our first, on this chart anyway, parabolic top 2017, next parabolic top 19, and this most recent one. Now what we see here is completely different prices, but prices don't mean much to me. Like I say, risk levels is what count for me. So when we look at the money flow index here, the money flow index is for me one of my favorite indicators in terms of spotting not specifically price tops, but close to tops. Basically warning signals, extreme warning signals saying you might be at the top now, you could still have another 10%, maybe another 20% to go, but you're on thin ice. And I've been saying this on my channel for a while. I've been saying it in my Telegram, been telling people that the levels of risk are high, so everything's got to be managed correctly. So money flow index hit there and did a giant stonking crash back down. 2019 straight back up again, stonking crash back down. Now this one is different because we've had a staggered flow of money come into the market, and then we have had a blow off top that's come right out into not quite as high as either of these two, but high all the same. I was saying that given the fact that we've had this steady momentum and some form of I suppose structure to the money flow index on the weekly, is unlikely that we're going to have a giant collapse afterwards. And even though this might feel like a giant collapse, it's not really, but it does bring back memories. Alright, so I've been in crypto for many years actually, and I've seen this. I saw this play out in real time, saw this one play out in real time, and now we're all together and we're watching this one play out in real time. But this isn't new to me. In fact, this behavior is very similar. It might not be in terms of price action, but it certainly is in terms of behavior. So what we saw here is this giant move up, and what we saw thereafter, and again I'm not expecting this, but I'm just showing you something that is to be I suppose taken in in the back of your mind. Okay, so let's zoom in a bit actually before we start measuring things out. It's not so much about the measurement that I'm showing you, it's about the support levels. So this is our 10 exponential, and everyone knows that I love these exponential moving averages, and this is one of my favorites, right? So the 10 exponential, we rallied all the way up to the top here, absolute top here, basically call it 20,000, and then the next week we'll measure it from the peak to the drop. There's a 45% drop. Now this is at the end of a bull market, right? So this is kind of to be expected. Plus Bitcoin was heavily speculated on, way more than it is now. It might be up more in value now, but the speculation of the price was basically ridiculous at this point. You've seen all the videos of people talking about $100,000, $1 million per Bitcoin. That's not new. I heard all this back here. Do you know what I mean? And people went in for that, because when you're basically going parabolic and you don't know where the top is, people like to think about becoming millionaires. It's like having a lottery ticket. You want to hold on to that dream, and people held on to it for a little too long, and then it sank 45% in basically, it was pretty much a day or two, down to the weekly 10 exponential moving average. Then we had a nice little bounce, and this is a nice bounce, I can tell you that for a fact. That is a nice bounce. That was a 40% move from the bottom to the top, following that through to the next week. Everything's okay, guys, everything's fine. We're up 58%, everything's fine. Unfortunately it wasn't fine, but I'm not saying, I'm not measuring out these targets to say that this is how we're going to behave now. measuring out these targets to show you that there's a method to this parabolic move coming down to touch something specific, something tangible, which is the 10 exponential. 1, 2, 3. Ooh, that's dicey, and then failing that down to the 20 weekly moving average, which is something that I'm sure you've heard about, but it's extremely relevant. Staying above that 20 weekly, basically, in a nutshell, and in brief summary, means bull market or bear market. If you're above it, bull market. If you're below it, bear market. Simple as that. There's a lot more to it than that, but that is basically the bottom line. So what I'm saying is, we broke down and touched this several times before we took it any further. Now, this would have gone into a bear market. It was destined to do so. It was continuing with its 4-year cycle, and this is how it's behaved in the past, and this is how it's behaved again. So I'm not going to look at that in terms of this is what we're expecting. This is a little bit more like what's happened now, in my opinion, because this was the bottom. The bull market began around here. The bull market began. We reclaimed the 20 weekly moving average, and then people got way too excited, riding up the 10 exponential. That's what happens. We ride up 10 exponentials when we're in a bull market, and then we blew off the top, and we came back down, and we came back down to test the 10 exponential moving average several times. 1, 2, 3. These are weeklies, by the way, and then we couldn't take it anymore, and it crossed down below, and then unfortunately, other things happened. But this is what I'm kind of thinking is what's to be expected right now. I'm not saying that it will. I'm going to go to a daily chart, and I'm going to show you something else. All right. Again, the pink one, my pink centre of the Bollinger Band is the 20, so it's a 20 daily now, and again, just as relevant as a 20 weekly when it comes to bull and bear markets, or should I say, deeper lower lows. So at the moment, I was saying this on my Telegram and on my Patreon, saying, look, let's keep it simple, all right? Simple, in simple terms. We've rallied up so far, and now we've come down to test the most obvious support, which is, it's happened very quick, but we're down here at the 20 now, the centre of the Bollinger Band, the 20 daily moving average. So this is the obvious place to pick it up at, all right? Doesn't mean that it can't come down. The way Bollinger Bands work, or the way the 20 weekly or 20 daily or 20 anything works, is that if you're above it, you're more likely to stay above it than break down below it, but only by 65%. 65% more likely to stay in this zone than to break down and go into this zone, if for whatever reason. Because again, 65% isn't the greatest odds. If you had some illness and you were told you've got 65% chance of living, you wouldn't feel comforted within that statistic. You would there's a massive element of doubt in your mind that it'll work out okay. Now, even though the odds are in our favour, and we may bounce from here, we may not, and if we break down, we will be breaking down, and then that means that 65% chance that we will stay, within the bottom area here, and the longer we stay in here, it gives these moving averages chance to move down, and then they will all begin to turn to resistance, and we will stay there for longer than you'd think. Anyway, we're above there at the moment, so everything's okay for this very moment in time. So when we're talking about buying dips and things like that, that's all well and good, but it's also probably the better way to buy a dip is to stagger your orders. So because the odds are in our favour at the moment, buying a dip at this level is statistically the best place to buy it, but it doesn't mean that it's the best place to buy it or the only place to buy it. So because we're more likely to bounce from here and things could be okay, you could argue that 50% of whatever it is that you're looking to buy a dip with could go in here. But if it does break down, then you've got another 50% to stagger into different places. Now, if that breaks down, I'll be talking about this 10 exponential on the weekly, and that brings us down to around about 26 at the moment. Now, this goes up every week, but basically for the rest of this week, it's going to be roughly around 26. There is a very strong chance that is where we're going to go. If we break down beneath the 20 daily, which is the centre of the Bollinger Band, you can all keep your eye on that on the daily. It's no problem. If we do break down from there, I would be targeting areas of $26,000 for a Bitcoin, which would be a further 17.5% drop from where we are at this very moment with the price action right now. Does that mean it's a problem? Well, yes and no. I mean, it means that it's following the same pattern as here. It would also mean that it would be following the same pattern as here. It would also mean that the money flow index would be following the same pattern as here. But there's a few other things that we could look out for, and the money flow index is one of them. What we'll be looking for is to see this come down to this trend line. That would be a good opportunity in my mind to say, actually, we might be onto something. Whatever the price would be at the time that this money flow index picks up and revisits this trend line, that's where I'll be thinking of picking it up again. So, like I say, my first buy order is here. I've bought this dip with 50% of what I would normally invest into anything for buying a dip. And if it breaks down, 26,000 would be my next target, because that's the 10 exponential moving average. Again, that would be following previous fractal history. And then if that breaks down, this isn't going to give me a price target. This is just going to give me a likelihood, a probability of it being the bottom. Now, because this is a weekly, this could take ages to come down here. And as you can see, this is moving up very fast and steep. And wherever the price will be, whether that's 26,000, 25, 20, 16, who knows where it'll be. But when this revisits this level here, I'll be very confident at that point to say that this is likely to be the bottom. And we can, not safely, but statistically more likely to bounce from here at this point than anywhere else, whether it's a support, a resistance, a moving average, or just pot luck. So I'm just going to leave it with you there. Like I say, I'm not spreading doom and gloom. Like I say, I think statistically the odds are in our favour at the moment. We're above the 20 daily, and because of that, we have every chance now to at least go sideways for a bit, or maybe even perform a decent bounce. But if we do break down, I've got targets, and I've got reasons for those targets. Some are moving averages, some are other indicators. But at the end of the day, when we're looking at some of these other indicators, they are looking a little bit dicey. The MACD is fastly approaching a turn down. However, we are massively in bullish territory, but this is very steep. This is going to form a cross. This is no doubt going to diverge as well. And the RSI is very, very low. So a lot of people might be looking at that and going, this is a buy signal. The RSI is low. But that's not really how the RSI works. Particularly, I would argue that the RSI doesn't really work that well with Bitcoin anyway. Especially recently, it's kind of been one of those indicators which is not give mixed signals, but it's not been very good on these higher term time frames. It's been a little bit better on the lower, like the hourly and things, it's spotting divergences, but it's been ignored for a very, very long time. And because we've not had a consolidation period, moving up into this does have the capacity now to go down further. Although, like I say, at the moment of making this video, the odds are in our favour for at least bouncing here before we make a decision to go lower. Anyway, I thought I'd just leave it with you there. It's a bit of food for thought. I'm not here to say we're going to bounce, we're going to go crazy. I'm also not saying we're going to the depths of hell. I'm saying let's look at this rationally and incrementally, and let's screw our heads back on. It's been a 24-hour period that a lot of people might not have even seen before, but trust me, I've seen it all before. And it's likely to begin behaving very similar to the way it has done in the past when we've had these extreme moves, blowing up the money flow index to these levels. And even though we're not as crazy as we were here, nor are we as crazy as we were here, despite having a price which is massive in comparison to both of those, double the amount. I don't think it's doom and gloom, but it's definitely worth having a plan and a strategy in the event that it does play out in the same way that it did last time. Anyway, thank you for watching. I hope you have a nice evening. Take it easy.